Lam Research Corporation, ticker symbol lrcx, is expected to report its quarterly figures Wednesday, October 23rd. It currently has a market cap of close to $95 billion and a forward PE of 20.3 times. It also pays a little dividend. It has a dividend yield of 1.26%. Now, year to date, the stock is actually down 6.35%, with the most recent drop in the stock price coming after ASML's earnings report. Now, in the last 3 years, you can see the stock is up 33%. In the last 5 years, the stock is up over 220%. Now, this is a company we've talked about in the past, and to be honest, it is very well positioned. Now, it might not seem like it is well positioned, or it might not seem like it is doing well because of this stock's performance, but maybe that's where there is the opportunity for long-term investors, because this is a company that is still expected to grow. I mean, even in fiscal 2025, sales growth, EPS growth still above 15%, going into fiscal 2026. About the same, and actually a small acceleration in growth, top and bottom line. And then in fiscal 2027, little slowdown, sales growth of 9.6% year over year, and EPS growth closer to 13% year over year. Currently, the average analyst price target sits close to 35% higher than the price we're at today. Now, the average analyst price target did come down from $105.4 to now $97.8 since the start of August. Now, despite this stock's underperformance, let's say, if we look at some pricing metrics here, forward PE, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth, we can see that we are pretty close to the 5-year mean. Now, you might say, okay, so what's so special about that, right? If it's close to its 5-year mean, it's definitely not undervalued, not overvalued, so okay, let's see what happens. Yes, you could make that point, but I do believe that right now there has been, let's say, a lack of growth in the company, and you were going to look at that in just a second, and there is more growth expected in the coming years. And so I do think that currently with a forward P of 20.3 times, price to free cash flow, that's in the last 12 months, 22.2 times, I think this stock could get a higher premium if they can show us, especially already on Wednesday, if they can show us that, look, we are in growth mode despite what we have seen with ASML's report. We are doing better, and we expect to do better going into 2025 as well. And then, of course, there was also some solid commentary from TSMC. So definitely there are two sides to the semiconductor story, right? One day ASML crashes the whole semiconductor market, let's say. The next day TSMC does the exact opposite. So let's have a look at Lam Research. Of course, there are some other companies out there as well. I think Applied Materials might also be an interesting play. Maybe I'll do a separate video on that company. Now, before continuing here, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so as you can see right here, the estimated growth for revenue for fiscal 2025, which for them has started, right? The Wednesday earnings report is Q1 fiscal 2025. So for fiscal 2025, revenue growth is expected to be 16.1%. In fiscal 2026, about the same, and then a drop in fiscal 2027. Free cash flow basically being flat year over year, and then growing a little bit in the next 2 fiscal years. Now, looking at gross profit, net income, operating margin, and gross profit margin, we can see a little bit why the stock has struggled, right? If we look at gross profit, that has dropped from the peak here, Q4 2022, but we have seen a recovery since Q2 2023. As for gross profit margin, we've seen a recovery there as well, and the same for operating margin, although still some ways from the highs of 2022. If we go back to last quarter's earnings report, we can see that 43% of system revenue came from foundry, 21% from logic, 19% from DRAM, and 17% from NVM. If we look at the regions, and here maybe we might get the same issue as with ASML, it's that, well, revenue by region, 39% comes from China, 15% from Taiwan, 18% Korea, only 10% from the United States, 3% from Europe, 7% from Japan, and 8% from Southeast Asia. So yes, if let's say China continues to be a drag on these types of companies because of, well, geopolitical issues, restrictions, export restrictions, stuff like that, it could be the same story as ASML. It could hurt this company. Last quarter, these were the results. So revenue came in at $3.87 billion, non-GAAP gross margin 48.5%, non-GAAP operating income $1.18 billion, and then non-GAAP diluted earnings per share $8.14, and diluted share count 131 million compared to 132 million in the quarter before. As for the coming quarter, Lam expects revenue of just over $4 billion, gross margin of 47%, and operating margin of 29.5%. Now, here were a couple of comments that were made during the last earnings call and some conferences as well. So first up, strategic initiatives and product development. So technology inflections. Lam is prioritizing product development for key technology inflections like gate-all-around, backside power delivery, and advanced packaging, which are etch and deposition intensive and represent $1 billion plus growth opportunities. The company is developing new dielectric etch and deposition capabilities to support NAND scaling, including its Cryo 3.0 cryogenic etch technology and a PECVD-based pure carbon gap filled process. I'll pull up some pictures. Now, as for the memory market, so DRAM and NAND, we've talked about that with Micron as well. So DRAM revenue reached a new record in fiscal 2024 with spending focused on DDR5 and HBM enablement. NAND investment is expected to gradually improve as utilization rates return to normal levels. Lam sees opportunities to gain a share in DRAM through its new conductor etch capabilities, targeting for F2 and EUV patterning requirements. With regards to inventory management, they said here bringing down inventory levels has been an ongoing focus. Inventory grew when the NAND business declined last year, but Lam expects to consume that NAND inventory as the market improves next year. NAND wafer fab equipment spending was down nearly 40% year on year, led by cuts in NAND spending of more than 75%. Despite the downturn, Lam generated $3.8 billion in revenue from NAND, indicating strong performance in enabling NAND structure, etch, and metallization. As for the future outlook, Lam expects NAND spending to improve in 2025 with a strong setup developing for NAND spending. The company believes its capture rate of NAND wafer fab equipment will be higher in an upgrade-driven cycle versus a greenfield capacity addition cycle due to its strong position in the installed base. Again, it remains to be seen what happens with the other companies if they are delaying their orders, yes or no, because of, well, some internal difficulties. Then this could be a drag on a company like Lam, just like we've seen with ASML. Now, they are positioning themselves to be a bit more diversified. So they said here, Lam is working to diversify its business beyond just NAND, focusing on strengthening its position in foundry, logic, and DRAM markets. The differentiation is seen as a way to balance out the cyclicality of the NAND market. Lam remains optimistic about the long-term NAND demand outlook, driven by factors like the growth of AI and the need to store large language model data. The company expects the first sign of NAND spending recovery to be in increased utilization of existing NAND fabs, leading to higher demand for spare parts, service, and upgrades to the installed base before new wafer capacity is added. Now, I do want to mention a comment that the TSMC CEO said last week. So as the strong structural AI-related demand continues, we continue to invest to support our customers' growth. We now expect our 2024 capex to be slightly higher than $30 billion. Between 70% and 80% of the capital budget will be allocated for advanced process technologies. For TSMC, a higher level of capital expenditures is always going to be related with higher growth opportunities in the coming years. And as long as our growth outlook remains strong, we will continue to invest. So it's very likely that our capex next year will be higher than this year. Now, I'm going to do a separate video about TSMC and ASML, but to be honest, I think TSMC is one of the purest ways to play the AI wave or just play the semiconductor wave, period. But going back to Lam, I think this comment does bode well for them, despite what we've heard and seen from ASML. Now doing a quick reverse DCF here for Lam, so we put here the free cash flow trailing 12 months, which was $4.255 billion, terminal growth rate of 4.08%, and a discount rate of just 8%. Now to justify today's price, the implied growth rate for the next 10 years sits at 2%. That's about it right now, which to me, as you've seen, it's expected to grow in the next coming fiscal years a bit faster than just 2%, right, for revenue. But even for free cash flow, even purely free cash flow wise, it's still expected to grow faster than that. So in my opinion right now, this does seem like a great opportunity. Of course, like I said in previous videos, with earnings season, there are a couple of ways you can play it. Of course, there's the option ways, although I'm not really that familiar with that, so most of you can educate me in the comment section below. Or the normal way is either one, you wait and you get more information during that earnings report, earnings call. Yes, it's true, maybe the stock will go up, so you have to pay a little bit more, but at least you have more information and you make a more informative decision when you buy those shares. Or you open a small position and then whatever happens, you add after that earnings report and earnings call. Whether it goes up or down shouldn't really matter that much, because if it goes up, then your small position is now worth more. If it goes down, you have more information, you know why it went down, and then you can make the informed decision of, well, I'm dollar cost averaging right away, or I'm waiting a little bit. And then you continue with your investing journey, whether you sell that small position because you're not happy anymore, or you wait and you add a little bit more down the line. Now looking at the stock right now, we see a rejection from last week on the weekly candle. Of course, that's because of ASML's report. So that brought this stock right back down to what seemed to be a short-term bottom here at around $70, which we've seen back in August and we've seen at the start of September as well. RSI is low, but nowhere near being oversold. It's up to you if you want to open a small position before the earnings report or not. I mean, it still is a very, very good company. I think for the long run, they'll do quite well. Financially, they're very, very stable. They're buying back share, paying a small dividend, expected to grow back. Now, yes, there might be some short-term issues, remains to be seen, but I still think that Lam plays an important part in the whole semiconductor ecosystem. So let me know what you plan on doing in the comment section below. If you enjoy this type of videos, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.